Arizona residents face a major health insurance cost surge this year. The Arizona Department of Insurance and Financial Institutions has issued a stark warning. Health insurance premiums on the state's Affordable Care Act, ACA marketplace could skyrocket this year, with potential increases as high as 55.3%. But the real shine might come from a less obvious source. Federal tax credits that have long helped offset premium costs are set to expire. This combination of factors could leave many Arizonans scrambling to find affordable coverage. Phoenix, if you're planning to enroll in health insurance this fall, brace yourself for a dramatic shift in your monthly payments. The state's insurance regulator has confirmed that insurers are proposing rate hikes ranging from 2.5% to a staggering 55.3% for plans available on the state's ACA marketplace. While these numbers might seem extreme, they're part of a broader trend affecting millions nationwide. This isn't just about higher prices. It's about a fundamental shift in how insurance costs are calculated, explains Matt McGough, a policy analyst at KFF, a nonprofit organization that tracks health policy trends. Most people will see their premiums rise significantly because the tax credits that once reduced costs are no longer available. In Arizona, that could mean a 90% increase for some enrollees. The Arizona Department of Insurance and Financial Institutions has published a detailed breakdown of proposed premium changes. https://diffie.az.gov/2026 open enrollment, showing insurers are adjusting rates based on personal factors like age, location, and pre-existing conditions. But the biggest challenge comes from a less visible factor: the expiration of federal tax credits. When people lose their subsidies, it's like removing a safety net from their budget, says McGough. Younger, healthier individuals may choose to drop coverage as costs rise, leaving insurers to cover a larger pool of sicker, more expensive enrollees. That creates a feedback loop where prices keep climbing. This dynamic is exacerbated by rising healthcare costs, some of which stem from recent trade policies. Insurers are pointing to tariffs as a major driver of future premium increases, especially for medications and medical devices, McGough adds. These costs are now being passed on to consumers, making coverage even more expensive. The situation is further complicated by changes to federal ACA rules that require consumers to pay a larger share of their insurance costs. Small business owners and gig workers, who often rely on ACA plans, may now face tough choices: accept higher premiums or switch to employer-sponsored coverage. Unfortunately, some people won't have good options left, McGough warns. This is a crisis that requires both individual action and systemic solutions. Diffie is advising residents to shop carefully this year, emphasizing that the open enrollment period runs from November 1st to December 15th. But here's where it gets controversial. Some argue that the federal government should have extended tax credits instead of letting them expire. Others say the rising costs reflect real market realities. And this is the part most people miss. While the headline is about price hikes, the deeper issue is a system that's struggling to balance affordability with sustainability. What options do you think people should consider? Share your thoughts in the comments below.